When comparing the upcoming IPO of Hyundai Motor India with Maruti Suzuki, it is evident that there are several key distinctions in terms of market position, financials, and growth strategies. Maruti Suzuki, with its dominant presence in India, has a staggering market capitalization of over Rs 4 trillion. On the other hand, Hyundai Motor India's valuation post-IPO is expected to be around Rs 1.6 trillion, making it significantly smaller than Maruti, but still a substantial player in the Indian market. In terms of revenue and profitability, Maruti Suzuki reported a revenue of Rs117,571 crore for FY23, while Hyundai's revenue for FY24 stood at Rs69,829 crore. When it comes to profitability, Hyundai's net profit grew by 28.7% to Rs60 crore in FY24, whereas Maruti's net profit for Q1 FY25 was Rs650 crore, showcasing strong performance by both companies. Maruti Suzuki holds a commanding 41.7% market share in the Indian passenger vehicle segment, whereas Hyundai ranks second with a market share of 14.6%. This means that Maruti has a more extensive domestic footprint, while Hyundai's focus on exports balances out its overall performance. When comparing dividends, Maruti Suzuki offers a dividend yield of 0.97%, having paid Rs125 per share in FY24. In contrast, Hyundai announced a much larger dividend payout of Rs13, 270 per share, reflecting its robust cash flow ahead of the IPO. Both companies are investing heavily in expanding capacity and prioritizing innovation. Hyundai plans to increase its capacity by 30% in the coming years, with a particular focus on electric vehicles, EVs, and exports, leveraging its global network. Maruti too has plans for investments in renewable energy and EVs, but its emphasis remains largely on its established domestic market. Hyundai Motor India has consistently shown growth, driven by a strong product portfolio and an effective export strategy. Since 2009, it has been the second largest OEM in India, continuously increasing its revenue and profits. The company's upcoming IPO aims to raise Rs27,856 crore, and its financials indicate solid fundamentals, with a 13% EBITDA margin in FY24. In conclusion, although Maruti Suzuki holds a dominant position in India with greater revenue and market share, Hyundai Motor India offers strong profitability, export prowess, and a significant dividend yield, positioning it as a solid competitor in the Indian automotive sector.